Good day, everyone. For today's session, we will discuss the double entry bookkeeping method and the rules of debit and credit. And also, we'll discuss about chart of accounts. I will be sharing with you the most common account titles used in recording business transactions. Okay, what is a double entry bookkeeping method? This method recognizes the dual effects of a business transaction. So what does it mean? Okay, it means that when you record transaction, you record the value received and the value parted with. And with that, you should have a debit entry and a credit entry. And you will learn more of this debit and credit when we discuss the next slide, which is about the rules of debit and credit. Okay, what is these rules? Okay, recall our accounting equation, the one we discussed last time. Okay, we have assets equals liabilities plus owner's equity. Okay, you will notice, and it's very obvious that assets are found on the left side of the equation, and we call that the debit side. And liabilities and owner's equity, these elements or these items of our accounting equation are found on the right side, and we call that the credit side. If the assets are found on the debit side, that means assets normal balance is a debit or are debits, okay? And for liabilities and owner's equity, since they are found on the credit side, their normal balances are credit. So when you increase your assets, let's go back to assets, you will need to debit the assets. And that's DR when you abbreviate the word debit. And then when you decrease assets, okay, you will credit the assets. And that's CR when you abbreviate the credit word. And then liabilities and owner's equity, since they are found on the right side or credit side, and that's their normal balance, in order to increase them, you have to credit these elements. Okay, how about when you decrease liabilities and owner's equity? Okay, so you will have to debit these elements. So in short, when you increase your assets or the increase in assets, that means debit. Decrease in assets, that means credit. Increase in liabilities or owner's equity, you credit. And then decrease in liabilities or owner's equity, you debit. Okay, so I hope the rules of debit and credit is clear or are clear with you. Again, you have to remember the rules of or the accounting equation wherein assets equals liabilities and owner's equity. Since assets are found on the left side, this is actually the debit side. Assets normal balance is or are debits, and liabilities and owner's equity are found on the right side, and that's credit side. Their normal balance are credit. Okay, so let's move on to the next. Let's take a look on the owner's equity and the transactions that affect owner's equity. The question is, what items will be debited and what items or transaction will be credited? So it depends. You have to analyze the effects of these transactions on the owner's equity element. Okay, so let's examine first and analyze the effect or effects of these transactions to the owner's equity. Will this transaction increase or decrease our owner's equity? Once we have identified the effects of these transactions to owner's equity, then it will be easier for us whether these transactions will be debited or credited. Okay? So investment or additional investment by the owner, since it will increase your owner's equity, and that's the effect of this investment and additional investment to the owner's equity. So what will you do? Will you debit and credit this transaction, this investment? Yes, it will be credited. Why? Because when we increase owner's equity, we credit owner's equity. Okay? How about withdrawals or drawings of the owner? Will it increase or decrease? Definitely it will decrease. So what will you do? Will you debit or will you credit withdrawals or drawing? So you have to debit. Okay, how about income from operations? Income from operations will increase your owner's equity. So that's addition to your owner's equity. So what will you do? Okay, same rule, increase in owner's equity means you credit, so you will also credit. How about expenses from operations? So since expenses decrease your owner's equity or will decrease your owner's equity, you will debit expenses. Okay, so that's how we treat these transactions which affect our owner's equity. Okay, let's have an exercise. Okay, your task is just to identify whether the item or account should be recorded as a debit or a credit. Okay, I have here 8 items. So your task is determine whether this will be debited or credited. Okay, remember our accounting equation, asset equals liabilities plus owner's equity. Asset found on the left side, that's a debit side. And then liabilities and owner's equity, right side. And that's a credit side. Okay, so let's start decrease in income. Okay, remember when we analyze the effect of business transactions to owner's equity, decrease in income means decrease in your owner's equity. And when we decrease owner's equity, we usually, and we should debit. Okay, how about increase in capital? So it's very easy. Increase in owner's equity, you will credit. How about increase in assets? Okay, since assets are found on the left side of the equation, you debit. About decrease in liabilities. Okay, liabilities are normally credit side. So in order to decrease, debit. About decrease in expenses. Expenses are generally a decrease in owner's equity, but in here, it's a decrease. So the decrease in expenses will increase your owner's equity. And what will you do? You will credit. How about decrease in capital? Okay, owner's equity, when you increase, you credit. Then when you decrease, you debit. Okay, about increase in liabilities, liabilities are found on the credit side, credit. And then how about decrease in assets? Okay, since assets are found on the debit side, okay, the opposite, you credit. Okay, so that's our answers for exercise number 1. Okay, so I hope you also got the same answers. Okay, let's move on to the chart of accounts. Okay, what is a chart of accounts? This is a listing of all the account titles and their corresponding numbers in the ledger. Okay, when you record business transaction, you have to assign appropriate account titles for your business transaction. That's why we define accounting as an art of recording, right? So I hope that the account titles that I will be sharing with you, you have to familiarize them because it will be a great help for you when you do the recording of business transactions. Okay, this is an example of chart of accounts of a service business, and service business will be our focus for our session and for the succeeding discussion, particularly the sole proprietorship form of business organization. Okay, the chart of accounts, okay, as mentioned, contains the listing of all the account titles and their corresponding numbers in the ledger. Okay, so you need to have these numbers because after you do the recording, when you journalize, you will transfer your journal entries to the ledger, and you need these numbers. Okay. Also, in our chart of accounts, you will notice that the accounts are divided into balance sheet accounts and income statement accounts. Balance sheet accounts or the statement of financial position accounts, we have the assets, liabilities, and owner's equity, while income statement accounts, we have income and expenses. Balance sheet accounts are also called real accounts, okay? So please take note of that. Balance sheet accounts are also called real accounts, whereas income statement accounts, they are also called nominal accounts. Okay, let's move on to the different account titles. Okay, so under assets, okay, we have the current assets. We divide assets into current and non-current assets. And I will be sharing with you what are the account titles under current assets, and then what are the account titles under non-current assets. Okay, we already defined assets in our previous discussion. So let's move on to the example of current assets. First, we have cash. And cash includes coins, currencies, checks, bank deposits, and other cash items readily available for use in the operation of the business. Okay, so we have here cash as one of the account titles under current assets. What else? We also have accounts receivable. So what is accounts receivable? This is the amount collectible from the customer to whom sales have been made or services have been rendered on account or on credit. So when you rendered a service and your client did not pay you yet the amount of service, then that's your accounts receivable. Okay. Next is notes receivable. Okay. What if the receivable was evidenced by a promissory note? Okay, so we have here notes receivable. Notes receivable is a promissory note issued by the client or the customer in exchange for services or goods received as evidence of his or her obligations to pay. Then how about interest receivable? Amount of interest collectible on promissory note received from customers and clients. So this is in addition to your notes receivable. So you have interest receivable. Okay, what else? What are the other account titles under current assets? You have inventories. And what are inventories? These are assets which are held for sale in the ordinary course of business. If the business is actually in the merchandising or trading business, or in the process of production for such sale, in the case of manufacturing businesses, or in the form of materials or supplies to be consumed in the production process, or in the rendering of services. So even if the business is servicing, there are also inventories in the form of usually supplies inventories, okay? Particularly office supplies. Then prepaid assets. These are unused supplies or expenses already paid but not yet consumed and or to be applied in the future periods. Example, prepaid insurance, prepaid supplies, and prepaid rental. So assuming that your business paid insurance for 1 whole year and your business started operations October. So from October, November, December, the insurance, the insurance for 3 months represent the expired portion of the insurance, while the remaining 9 months, that's your prepaid insurance. So same with your prepaid supplies. So whatever was left at the end of the period, that's your prepaid supplies. Okay. Then you also have prepaid rental. And you will learn more of this when we prepare adjusting entries. Okay. Next, advances to employees. Okay, this account is used for certain amount of money loaned to employees payable in cash or through salary deductions, because sometimes employees are in need of cash and the business will grant the loan to the employees, and the account title used by business for that is advances to employees. Okay. How about non-current assets? These are the account titles that we usually use under non-current assets. Okay, land. This is a piece of land or real estate owned by the enterprise on which a building can be constructed for business purposes. Okay, that's land. What else? We also have building. This is an edifice or structure used to accommodate the office, store, or factory of a business enterprise in the conduct of its operations. What else? Okay, we also have equipment. It includes air conditioners, computers, trucks, cars used by the business in its office, store, or factory. And the business may also use specific account titles for equipment. Okay, example, office equipment, store equipment, delivery equipment, transportation equipment, and machinery and equipment. What else? We also have furniture and fixtures. These are long-lived assets which are detachable from the building, such as tables, chairs, lamp, and lighting fixtures and wall decors. So same with equipment. Specific account titles may also be used, such as office furniture and fixtures and store office furniture and fixtures. Okay, another, we have under liabilities. Liabilities, these are amounts owed by the business or payable by the business. We have the same classification as our assets. We have also here the current, the word current. So we have current liabilities. Example, accounts payable. It includes debt arising from purchase of an asset or acquisition of services on account. For example, the business purchased equipment and the business did not pay in cash. It's on credit. So that's accounts payable. Okay, how about notes payable? Okay, if your payable is evidenced by a promissory note, okay, so you have notes payable, but you have to take note of the period. This is a promissory note issued by the enterprise maturing within 1 year from the balance sheet date. Okay, so notes payable maturing within 1 year, so we classify that as part of current liabilities. Okay, what else? We also have here utilities payable, an obligation, a payable, okay, an obligation to pay utilities for services received from them. Example, you have the electric bill, okay, electricity, okay, the utilities companies providing electricity, so you have a payables to them or payable to them, okay, water, what else? Telecommunication, okay, etc. Okay, for telecommunication services. Okay, next, we have interest payable, interest on obligations already incurred but not yet paid. So we have interest payable. So what else? We also have under current liability, unearned revenue. So please take note of this one, unearned revenue or revenues. This account is classified as current liability. And what is this? Or what are these? This represent obligations of the business arising from advance payments received before goods or services are provided to the customer. For example, you have a client and you are in the medical and dental services. Your client paid you 10,000 for services that you will render next month. Okay, so 10,000 represents unearned revenue. Okay, under the revenue recognition principle, you only recognize income when earned. But when you receive advance payment for services to be provided to the client, then you recognize that as unearned revenue, and that is part of your current liability. Okay, let's move on. Non-current liabilities. Non-current liabilities, example, you have a loan payable. This is actually a liability to pay the bank or other financing institution arising from funds borrowed by the business from these institutions. And normally this is long-term. It's beyond 1 year. That's why it's under non-current liabilities. What else? Okay. Notes payable. Notes payable, you encounter this account title and the current liability. Okay, so you recognize notes payable as non-current liability if the promissory note issued by the enterprise matures more than 1 year from the balance sheet date. Okay, so again, if the promissory note matures more than 1 year, then you recognize that as part of non-current liabilities. Otherwise, if it matures within 1 year, then that's current liability. Okay, what else? Mortgage payable. This is a long-term debt of an enterprise for which certain asset has been pledged as security or the business provided a collateral to the creditor. That is mortgage payable. Okay, let's move on to the owner's equity. This is also called as capital, so you know this. Okay, what are the account titles under owner's equity? You have the name of the business owner, comma, and then capital. Example, the name of the business owner is Gian Season, and she established a laundry service or a consulting services. So under owner's equity, the account title to be used is G unseasoned, capital. Okay. And that represents the original investment, additional investment, and also includes net income. Okay, about name of business owner. Okay, withdrawals / drawing. Okay, example, the same name of business owner, G unseasoned, withdrawals / drawing. And that withdrawals of cash and other assets by the owner from the business. Okay, so that's the two accounts we use or account titles we use under owner's equity. Okay, another is under income. What are the account titles to be used? Since our focus is service business, so we use the service income account title, and that includes revenues earned or generated by the business in performing services for a customer or client. And this is usually non-professional services, example, laundry service, repair shop, etc. Okay? How about this one? Professional fee. Yes, professional fee. This is the account title used for earnings derived by a professional for services rendered to clients. So you have here the dental clinic and medical clinic. Okay, so the account title to be used, professional fee. What else? You also have here rental income. This account is used for earnings derived from allowing others to use the assets of the enterprise. Example, if the business has available office space and that space is being rented by another business, then the income derived from that is called rental income. Okay. Okay, let's move on. Expenses. What are the example of account titles under expenses? Okay. Basically, it's the salaries or wages. Okay, salaries or wages expense includes all payments made to employees or workers for rendering services to the company. Okay, what else? Okay, if we have the utilities payable, so we have a counterpart for that under expense category. So we have utilities expense, an expense related to the use of electricity, fuel, water, and telecommunication facilities. Next, supplies expense. So if we have in the asset supplies inventory or prepaid supplies, we also have a counterpart for that under expense category, and that is supplies expense. And it covers office supplies used by the business in the conduct of its daily operations. Okay, what else? Insurance expense. Okay, the expired portion of premium paid on insurance coverage, such premium paid for health or life insurance, motor vehicles, or other properties. Actually, this is the counterpart of our prepaid insurance. Okay, the counterpart in the expense category, that's insurance expense. What else? We have depreciation expense, and you will learn this account when we reach the adjusting entry, wherein you have to compute for the depreciation. What is depreciation expense? This is the part of the cost of tangible assets such as buildings, machineries, and equipments charged as expense for the year or for the current period. Okay. Next, the doubtful account expense, bad debt expense. This refers or this account title is used for estimated amount of losses from uncollectible account arising from credit sales. Okay. And what else? So we have also here interest expense, the amount of money charged by to the borrower for the use of borrowed funds, and that's interest expense. And basically, these are the usual account titles that you will be using when you record transactions in the service business. Okay, so let's have another exercise. You identify the appropriate account title to be used for the following items. So you have a lot of account titles under chart of accounts that we discussed. So just indicate the appropriate account title to be used for the following items. Okay, so we have here laptop. How will you classify it? Okay, normally we use laptop for office purposes, and it's being categorized as part of the equipment. Okay, and the account title part of equipment, and the account title to be used is equipment or office equipment. Okay, how about check? So this is very easy. We use the account title cash. Bond papers. Okay, you may use the account title prepaid supplies or supplies inventory or even supplies expense. So it depends on the method, and you will learn that when we reach the discussion about that, the deferral, accrual, the prepayments, etc., etc. Okay. Next, printer. How will you classify it? Okay. You may use the account title equipment or office equipment. About 300 square meter commercial lot. Okay, that's land. Newly constructed stock room. Okay, building. Okay, you use the building account title. How about office sofa? Okay, that's detachable. So usually we use furniture and fixtures. And then how about typewriter? Okay, so typewriter, we use equipment or office equipment. Okay, so that ends our discussion for today. These are my references. Again, thank you for watching this video. And again, don't forget to follow me. I have here my Facebook profile name. And of course, don't forget to subscribe to my YouTube channel. Thank you very much.